Hello, I'm Monica Gibson, and today I'm joined down the line by Peter Cardillo, Chief Macro Strategist at Rockwell Global Capital, to discuss the release of the US Federal Reserve's Beige Book report, which summarises national activity. Now, Peter, the data highlighted the US economy expanded further since the release of the last Beige Book, that all 12 Federal Reserves characterised modest or moderate growth and an increase in consumer spending. But what was your reaction to the report?
I think basically the report is in line with modest growth for the balance of 2013, and I am looking for growth somewhere between 2.25% to 2.5%. Of course, the sticky part is the unemployment rates, which continue to remain elevated.
Moderate, modest and steady, those are not words which really describe an economy operating at full capacity. Is this a good enough trajectory, however, for the US economy at the moment?
Yes, I think, the steady pace of economic activity in the States will be buoyed by, obviously, an improving housing market and manufacturing as well. And a lot of that stems from improving economic growth that we're seeing in China.
Today's report had some good news about the auto and home sales. Will 2013 be the year the housing market gains velocity?
I think that we're looking at a real turnaround in the housing market. There's no doubt that the housing market has turned. And, we still have some hurdles to tackle. And I guess the biggest hurdle that the housing market still finds itself marred with problems is the fact that rigid lending practices still do exist, although there seems to be a tendency in relaxing some of this rigid practices that have been taking on since 2008.
You mentioned earlier the US lending capacity. Will the positive outlook lead to the bottoming out of the credit market, do you think?
The credit markets, are still enjoying the fact that we have very generous central banks, not only here in the States, but throughout the globe. And with interest rates being so low, there's no question that the credit markets have bottomed out. The question is, when will the central banks and the Federal Reserve reverse the era of low interest rates? And I suspect that that could happen perhaps in early 2014.
Trends in wages and employment were relatively unchanged as businesses still seem to be delaying hiring. Is the US economy still being affected by tailwinds from the Eurozone debt crisis?
The tailwinds coming out of Europe, I think, have lessened grossly over the past 3 to 4 months. And I think what we're seeing here is confidence now beginning to build rather strongly throughout the Eurozone. So that just simply means that while Europe will continue to stay in recession, that is not going to really have a major negative effect here in the States. The fact that Asia is beginning to perk up again probably means that we can see a slight uptick, notwithstanding the recession in Europe, in global economic activity.
The markets had been stalling for months over the so-called fiscal cliff, and now we have the ongoing battle of the debt ceiling. Is that going to be another wrench in the US economy? And how do you see this being resolved?
Well, I think, that the debt problem is not really going to be an issue. I think they will raise the debt ceiling. There's no doubt in my mind. Obviously, the politicians are doing what they know best, and that is they're playing the political cards back and forth. And so I'm not really worried about that. And I think the markets are not really worried about that, because if the markets were really worried about that, we would see a sharp sell-off in the capital markets, and we're not seeing that. So I think the market is ignoring the fact that that there are threats out there that ceiling will not be raised. However, I think the problem of the question is probably more likely to have a negative impact on the markets, although I do believe that there will be some resolution to that as well. But that probably is where the markets are really going to concentrate over the next 4 to 5 weeks.
Immediately after the report's release, stocks and the US dollar did not seem to be too dramatically affected. There has, however, been concerns expressed lately that the world is edging closer to an all-out currency conflict. With this in mind, what is your outlook for the dollar moving forward?
I think we're going to see a steadier dollar. Of course, if I'm wrong about the U.S. Not getting serious in cutting their deficit, then obviously the dollar could come under severe pressure. But I think that we're looking at a steadier dollar in 2013, and I think that perhaps this fear of currency war that's now being talked about is somewhat exaggerated. I really don't see that happening. So I'm looking for a steadier dollar, probably a dollar that's going to stay pretty much confined within a tight trading range. I kind of suspect that there's a good possibility we could see the dollar perhaps trade as high as 85 based on the dollar index.
Peter, thank you very much for your perspective today. Tomorrow I'll be back with the week's final edition of the Press Review, so please do click that to take a copy for that. Bye for now.